Hi, everybody. Well, you will see that we have a guest who is right here with us. His name is Mitch Freedman, and he is a financial advisor, who has not only counseled people who have been through some of the biggest natural disasters that have destroyed their homes and their properties and helped those as clients, but Mitch lives in LA, and he himself is going to talk to us about what he went through. And I'm telling you, I learned so much about today's topic, which is natural disasters. We don't know when it's coming. These $1 billion extreme weather events are coming into even places that we don't expect, into areas like, all over. It doesn't even matter where you are, whether it's hurricanes, whether it's Florida, whether it's North Carolina, fires in LA. Some areas more predictable than others, but boy, these are now $1 billion events when they happen. And so aside from, and just after loss of life, we're really talking about loss of property. And so it kind of dawned on me that we needed to talk about what I call post-financial triage, post-natural disaster financial triage, and then planning ahead. How do you actually do that? Through my conversations with a few advisors, but Mitch being one, we ended up doing an interview with AARP on it because I learned so much that I had no idea about. And there's certain things that I want to cover, Mitch, that are key takeaways. But first, I want to, just be able to get a quick sense of an overview of what you do, okay? And then I want Richard and Terry to be able to kind of jump in and start the conversation. And then I'm going to guide us into some of these key points that we made in my other two interviews with you, okay?
Yes.
So
Sure.
maybe you could just start off giving us a little bit of context about, okay, financial advisor, natural disaster. It's not like you're putting a sign up saying, hey, had a fire, ruined your house, call 1-800-ADVISOR. This is not that. This is like, wow, you're a fee-only fiduciary advisor who's actually been through this yourself.
Yes, Pam, you mentioned in your opening remarks about the fact that pretty much no place is safe these days. And it used to be that disasters were rare. They're no longer rare. They happen all of the time. In fact, in some places, such as Florida, we've seen lightning strike twice in the same places a year or two apart. So everybody really needs to be prepared for the potential for a disaster. What do? I try to help my clients, and I learned so much about it by going through two disasters myself. The Northridge earthquake, where my home sustained substantial damage, and a fire that we had when I was living in Malibu. And my practice is I call myself a wealth manager. We do pretty much everything for our clients. Anything that has to do with money. We are a multifamily office type of a practice. So we're accustomed to doing everything that has to do with financial matters, as well as even some matters that might be considered non-traditional for an advisor. Pardon me. We get very much involved with our clients' property and casualty insurance. As advisors, we don't sell it. We're not licensed to sell it.
That's key. You don't sell insurance. You are completely unbiased, working only for the client who may have to have a claim and needs an advocate. You need to be their advocate.
Well, not only be the advocate, but even well before any claim might arise, working with the client to make sure they have adequate insurance, or that they don't have too much insurance. And there was a time when that was probably less important. But today, when every single policy seems to be different, back years ago, policies were kind of fungible. It didn't matter which company you went to. The differences were in your premium. But today, policies, if you buy a homeowner's policy, it can be very different from company to company. And you may even have options within a company as to what you can buy and what kind of endorsements you might be able to buy. So it's extremely important to be able to advise clients in such a way that they are adequately insured and prepared for the possibility of substantial loss.
Mitch, were you or any of your clients affected by the most recent Los Angeles fires?
Thank goodness I wasn't, and none of my clients were. A number of friends of mine were affected. In fact, a former client who I still have a very good relationship lost his home that I helped him buy about 30 years ago. A colleague of mine who's another advisor lost his home in Malibu as well.
Terry, I wonder, with you're talking to people all the time, just like we all are hearing from people. What, isn't it funny how you think about financial advisor and you don't think about putting these two things together as crisis management and planning for crisis ahead of time. What's going through your mind when you're thinking about financial planning, financial advice, and preparedness? And
okay, well, I draw a line on the middle of this sheet of paper, and I'm fascinated, Mitch, to hear what you have to say. Some of the stuff, what you started talking about just now, is really sophisticated. It's what you do in advance. I mean, do you have the right insurance coverage? And if you've had that house for 30 years, has that policy grown? Do you have an umbrella liability policy? There's a whole checklist of things. But the other part of it, and the one that struck me most, we recently taped a podcast about getting organized, is the fact that everything was lost in those fires. And so I have become, and I'm in the process of doing, and believe me, it's tedious, a big advocate of securely storing information in the cloud. If the cloud disappears, you'll have your paper documents, but more likely these days, as Mitch said, that through tornado or hurricane or fires or earthquakes or whatever, that your physical stuff could disappear. So if you go back, you can look at friendstalkmoney.org and see that whole show we did. I talked about Quicken Life Hub, which is a place where you store not just your estate plan and your insurance policies, but your dog's rabies vaccination records, so that if there's nothing to come back to. So again, half of it is being prepared with the right stuff and having someone who cares about you, a wealth advisor like Mitch, more than someone who wants a fee for telling you which stocks to be in, someone who's really a financial advisor who goes over all that. And the second part is the physical nature of it. So I'm thinking with both sides of this sheet of paper, Mitch, as you talk and give us advice.
Well, it's interesting, Terry, that you mentioned storing things in the cloud, and certainly that's something that we do, as well as we advise our clients to do. We also do advise having a safe for important papers as well. And the interesting thing about that is when you look at some of the disasters, even these fireproof safes, they can melt.
Yes.
and documents and assets that might be stored there can also be demolished or eliminated or destroyed, even when you think that they're safe.
Yeah, I heard that just yesterday. This is very personal for me because I've got two grown sons who live in Los Angeles with their wives, and one has a new baby. They both had to be evacuated because of the Los Angeles fires. Thankfully, they're okay. Their homes are okay, but they were out of their homes for about a week. But we have another friend who has a son who lost his entire home, and they had a storage unit outside their home where a lot of their materials were because the home was being renovated. The storage unit also was destroyed in the fire. So you don't know when it could happen and what could happen as a result. You really need to be prepared.
I want to organize this a little bit in terms of post-disaster immediate, like almost like during, like these wildfires just happened. People haven't even decided yet if they're going to rebuild yet. So you've got what I call the financial triage that has to happen directly after. And then you've got the planning ahead list. So maybe like the three things that we have for the post disaster triage, and then the three things. And the one thing when we were talking, I'm going to kind of prompt you on what we talked about is things that Mitch, that you don't think twice about. Oh my gosh, people didn't know this. Like, for example, urgency to submitting a claim. Well, yeah, you want to get your claim in, but I know if it were me, I'd be also worried about, well, wait a second, I can't put my claim in because I don't have enough information. So therefore, I'm going to wait until I have enough information, fill out the claim, and then put it in. And you told me no. So that would be one of my top things for triage about this couple things on the claims, but that's one of them. Can you speak about not only the urgency and why, but also about critically important of finding the unbiased, independent claims adjuster?
I'll do that, Pam, but even before that, there's something else, and I'm not sure you and I have spoken about this before, but the immediate aftermath of a disaster is a highly emotionally charged period. And even if you think you're prepared, you are probably going to be influenced by things that are going on around you, whether it's a flood or the roof being blown off your house in a hurricane, or an earthquake where immediately you're starting to get aftershocks and you're having emotional difficulty. Before you think about anything financial, make sure that your family, your spouse, your children, any pets, that they're safe and in a secure place. And if your home hasn't been totally destroyed, it's partially destroyed, go out and turn off the gas so that a fire isn't started. And once you have that, and if you've pre-planned to have those steps and you have them in your head to do these things, then the emotion and the adrenaline that you're that's going to be coursing through your body isn't going to make you put you in a situation where you can't think. So you take care of that, and then the first thing that you do is in fact get your claim filed. And the reason for that, you might say, well, I do need to have all my paperwork in order. And yes, you do before you settle a claim. But in a case like the Los Angeles fires, where thousands of structures were destroyed, there may be dozens of insurance companies or more that are going to be handling claims, but they aren't going to be prepared to be able to handle all claims at the same time. So the key is to get your claim in so that the paperwork is started and so that the insurance company has you first in line or early in line, so that when it comes time to processing your claim, you're not several hundred people behind with the same insurance company. So that's number one. I think it's very important. The second thing, and this is something I thought I was very smart handling many clients' claims and getting them what I considered to be very good settlements on their claims. And I think I shared this with you, Pam. I said, both of my kids, one who's a CPA and one who's an attorney, said to me after our Malibu fire, he said, and our house was not totally destroyed. It was damaged severely. I said, I'm going to handle it. And my children said to me, Dad, we know you can do it, but this is a second job. And we talked about hiring a public adjuster who works for the insured. And the three of us decided we were all going to do our due diligence and see who we could come up with. In our particular case, all three of us came up with the same public adjuster who had an excellent track record. It was privately owned. The third generation at this point is running the firm.
Does not for the insurance industry, it works for you, the client.
Absolutely. Worked for me.
Wait, time out. How do you find, everybody's asking, I'm thinking this too. Where do you go find a public adjuster, and how would you judge? Just as long as we're mentioning that as a key, how do you find them?
That's a great question. They're going to find you. I found out during when the 6 or 7 fire engines were at my house putting out the fire. By the time they all left, there were cars parked on our street with people coming out with brochures and contracts and wanting me to sign. And obviously, they are monitoring the
Fire.
radios,
Yeah.
and they were there and very, very strong, trying to get me to sign a contract because of a wide variety of reasons.
Mitch,
Um,
just say it. It's a sleazy business.
So how did you
Well,
choose how did you choose one over the others then?
Yeah.
Well, reputation. But I'll go a step further, Rich, and say this. Um, as we said in our opening remarks, disasters are not uncommon anymore. They're common. So I think that an individual hopefully has a good team of advisors with them, that they have already done their due diligence before a disaster occurs, and they have as a potential part of the team, even if they haven't as yet they haven't as yet had the disaster or selected their team who's going to help with them, know who you want to go to.
Okay, so these are
I
state
have referred.
licensed, right? They're independent, they're state licensed. You can get lists of them. There's organizations, and we'll put this in the show notes. But Mitch, how did you actually land on the one that helped you so much? Because that's an art and a science.
Yeah, again, I thought I was pretty good. But after talking with this particular organization, I found out the depth of their expertise, the databases that they had. They were able to obtain for me probably, well, I can't say how much more than I would have gotten on my own, but they got much more for me than I could have gotten on my own, because
And
I don't know all the tricks of the trade, and
okay,
I
but
don't know everything.
had they worked, this is an important point about Terry and Rich's point about finding the right public adjuster. This adjuster actually had experience with this particular insurance company, this particular insurer. So they knew who they were going up against to fight for you. So it wasn't like this was an insurance company they've never dealt with before.
Can I guess? I'm going to be the naive one here today. Usually I think I know stuff, but not on wood, I haven't had to know this. I thought you just submitted your claim. Well, I hired Joe's contractors, and it cost $412,000 to rebuild the walls and the roof. Here, insurer, pay. When you talk about they got me more, don't you get what you get?
That's a good question. If you have a total loss, then in all likelihood, the policy is going to pay its limits. It's going to pay what the home is insured for. It'll pay what the contents are insured for. Hopefully you have the evidence of that. But if you have a partial destruction, then valuations come in. And in our particular case, we had more damage from smoke than we did from actual flames itself to our contents. Our contents, virtually all the electronic contents were destroyed. Smoke destroys them. We had brand new wooden floors that we put in through the house. They weren't destroyed by the fire. They were destroyed by the firemen who dragged hoses through the house. They used chainsaws on our tile roof in order to make sure that the flames weren't up in the rafters. My wife has an allergy to smoke, and the house had to be I'm going to just use the term cleaned in such a way that it would get rid of all of the smoke and do it without toxins cleaning.
All of that is super.
All of that was handled by the public adjuster and their contacts. Even such things as the upholstery, all of the upholstery and all of our furniture had to be replaced. The finest upholsterers doing the best work, and the insurance company paid for it all.
I wonder if Terry, and I don't know, I'm wondering if your question, and I just for clarification, is you put your claim in, okay, it may not be the be all end all perfect paperwork, You get it in, get in the queue. Then step two is that you're finding this public adjuster who then goes into get into the minutia of what they can get for you, including lodging, if you can't stay in the house and all of that. So that might not be in the claim that you submit because you were quickly trying to get in line. What if my claim that I'm in such a hurry to get in isn't, it hurts me in some way? Can the adjuster help that make that adjustment so that I can make sure that I'm going to get what I need to get?
Yeah, there is time.
Okay.
There's a timeline for things that need to be done, and you're not going to begin construction immediately. Even in a partial loss, you're going to be dealing with possibly an architect, perhaps, well, certainly contractors, and the adjuster in our particular case. The adjuster was like the front person who was our intermediary, so that the myriad of questions that we would have had to ask, he presented to us in a condensed way so that we could make sound and rational decisions after thinking about it and looking at options. We also knew that the contractors that he was working with and the subcontractors were all firms that were vetted by this organization, who was very trustworthy. All I can say is they earned their fee, and I was happy to pay it.
Oh yeah, what was their fee, by the way? I mean, is it a percentage?
Yes.
It's generally a percentage. In our particular case, we paid 10% of what they recovered. I'm sorry, of what was recovered. And quite frankly, the fee somehow or other, I'm certain, was added to the claim so that we were never really out of pocket for the fee. It was all taken care of.
Woo,
And,
this is an interesting lesson.
Can I switch gears a little bit to talk about financial disaster planning in advance? Because I wanted to be talking to our audience who, thank goodness, have not had this happen, but maybe one day might. So the two things I guess I want to talk about is one is sort of the financial first aid kit people can put together. Now, I know FEMA has on their website, ready.gov, an emergency financial first aid kit instruction. So I wonder if you can talk about sort of what to do so that you're ready if, God forbid, the worst happens. What should you also have in a financial go bag? What kinds of documents should you have ready to take with you? And also anything people should know about checking out their property insurance policy now when everything's okay, to be sure that if anything isn't okay, they will have the right kind of coverage.
Sure. Two different questions. So let me cover the Go Kit first. And we have one. We always have had one ever since the Northridge earthquake. We have had one, and it contains numerous things, not only financial things, but such things as copies of prescriptions, not only for our meds, but for our pets. It has copies of all the paperwork or the original policies that we have. Not that that's as important today as it once was because of being able to store things in the cloud, but passwords, a list of passwords to all of your accounts, a list of the account numbers so that you can handle them. Probably most important, and I found this after the Northridge quake, was you need a certain amount of cash, because when the power is out, your credit cards are useless. And if you need to put gasoline in your car, well, you might not be able to put gasoline in your car because the gas pumps might not be working. But I found that even going to the supermarket or going to our local pharmacy, you needed cash, and that is a reality. So having sufficient cash that will enable you to get through probably 72 hours or so, I think is a critical element. Not in my go kit, but in my head, there are certain things that I am prepared to do, and I do it instinctively because, as you said, Rich, I plan ahead now, and I tell my clients to plan ahead. I think it's extremely important in planning that you take inventory of your contents. And you say, oh my God, how am I going to take inventory of my contents? Well, there's such a thing as a video. And taking a video
An
of
iPhone.
all of your furnishings, and also going through your closet. My wife happens to be a collector of designer purses, so just taking videos of everything that she has, even taking videos of the contents of the closet. I happen to be a collector of a particular designer's men's shirts, and they're expensive. So I have each one in the video with the label, and I have that information available in the event I have a contents claim. Um, Again, in a total loss, if you're able to prove what you've lost, and your insurance is adequate, you're going to get the insured value of your contents, and you're going to
Faster,
get the
too.
insured value of your of the insurance on your structure,
I-
and you're
I've
going to
al-
start
That's a
over
good way to
again.
real
I've
estate.
also read people who recommended having your passport in this, a copy of your utility bill that has your address on it, copies of your wills and trusts. Do you think people need those things together too?
Yes, absolutely. Again, you might be able to get your hands on them, and your attorney might have copies of some of these things, but your attorney may be a victim of that disaster as well, and those documents may actually be destroyed. You might have them in a bank vault, but the bank might be destroyed or might be severely damaged, and you can't get to them. I think each case is different. I know that in our particular case, and we were very fortunate this time because we weren't evacuated, but 2 or 3 times we got what were called evacuation warnings, which enabled us to prepare in the event there was an evacuation
Gave you a
order.
little bit of time there.
Yeah.
Mitch, let's focus.
Um,
Let's
well,
try.
let me just finish one other thing. I also grabbed the computers. My computer at home is a laptop. My wife has 2 laptops, and we get those available too. The insurance policies, as Rich mentioned, even though my broker has copies of all of that, and I have copies on the cloud, I instinctively want to have the original documents with me. We also make sure we grab our medications so that we have a supply of them available. So much of this is emotionally charged. You're not going to think straight. Even if you have time, you're not going to think straight. So being prepared ahead of time, and even speaking with your key team players, your financial advisor, your CPA, sometimes like me, it's one and the same. Your estate planning attorney. All of these things are important. It's like buying, if you get your house in order beforehand, it's like buying insurance. You're ensuring, not insuring, but ensuring that you are not left in the cold, so to
Thank,
speak.
I
thank
have
you.
a couple things, Mitch, that I want to go touch back on Rich's point, and we're kind of I want to kind of gingerly run through them if we could. Just a quick tip about the real estate values. That's what property values. That's what Rich was starting to talk about. And then I have a couple more things I want to drive home that I learned from you.
Well, in terms of real estate values, people think about putting claims in and all, and after a disaster where there's severe damage or total loss, your real estate isn't worth what it once was. And there are two things that I think individuals should make sure that they think about. The first is to make certain that your home is for real estate tax purposes, that your home is reassessed. Because like here in California, we have Proposition 13. So you start with the insurance being 1% of the value of the property, or 1.25% of the value of the property. But if all of a sudden the structure is gone and really all you have is the land, then the assessed value probably needs to be reduced. And there are procedures for going to the county and getting that done. So
Mitch, that's your responsibility as the homeowner. You're not going to sit around and wait for them to make adjustments for you. Is that what you're saying?
You can wait, but I advocate for taking a more proactive role, because again, there's a judgment call here. It's a valuation, and your evaluation may be different than the county's evaluation. You each have different vested interests. The county wants to retain the value as high as possible to be able to collect the taxes, and you want to advocate for a lower valuation to reduce the financial stress on you on a piece of property that you have an obligation to pay the taxes on, even though you're not living there anymore.
Yeah.
So that's a critical element. The other element in terms of valuation is, if you've been in a home for a long time, the value of the home could exceed your insurance proceeds. And so you may have an uninsured loss. And this could open the door to be able to claim a casualty loss deduction. It's an itemized deduction on your tax return. It's a bit complex and beyond the scope of this discussion to get into the nitty-gritty of that, but just be aware that if you are underinsured, that you could have a very substantial itemized deduction, which can reduce your income taxes, which can help you during a period when you're trying to recover from disaster.
So that brings me to one of the final points here, is access to money if you have been, this is in a situation where, let's say it's a hardship and someone doesn't have a lot of savings and they need access to either their 401k or an SBA loan or something in order to just get back on their feet. And right now, maybe just explain, just if you would, just touch on 401k hardship and what's changed just recently, as well as, potential for SBA to be something that you can turn to.
Sure. Again, I don't advocate that people invade their retirement plans in order to cover them in a disaster. But as you so aptly put it, some people aren't appropriately prepared, or they may have to tap it. And if there has been a presidential announcement of it being a disaster area, you can take money from your deferred accounts and use that money without having to pay a penalty, the 10% penalty if you're under 59 and a half. And that can be a source of money of last resort.
Also, no interest right now for disaster victims as well. Normally you pay.
Yes, under those circumstances.
You'd have to pay it back within a couple of years with interest that you pay to yourself. But in this case, the interest, if you are doing it that way, the interest is waived in this case.
Yes, but that's a double-edged sword. From a
Yeah.
financial planning point of view, it certainly can ease your cash flow, but from a retirement point of view, that money isn't earning either dividends or interest or capital gains that they might otherwise earn in your
And again,
401k or IRA.
yeah, this addresses people who don't have the luxury of that choice. When you, just if you don't mind touching on it just briefly, SBA loan, you had mentioned to me that, you never really thought of that as a viable source, but it turned out to be.
Yes, that was during the Northridge earthquake. I had opted not to have earthquake insurance. I was a transplant from New York, and I just earthquake insurance was very foreign to me. And while I knew about it and
Yep.
advised clients about it, I opted not to have it. And lo and behold, we had substantial loss to our house. Um, Back in those days, it was before FEMA. And so we were able to get a, a second mortgage on our house at extremely low interest rate, well below market. And as I recall, it was a 15-year fully amortizable loan, which certainly helped. We didn't have to invade other sources of revenue in order to repair our home. Today, I believe that through FEMA, you can get an SBA loan. You have to go to the FEMA website to get an application. But a lot of people think, SBA, Small Business Association, but it also will provide loans to individuals who have suffered damages to homes as well. So that is most definitely a resource that I would recommend people go to if they decide to repair or rebuild, and they otherwise have a difficult time coming up with the funds or there's insufficient funds from an insurance claim to be able to fully restore the property.
Mitch, can I ask a very basic insurance question? For people who have a home with homeowners insurance, should they feel pretty confident that if there's a fire or a flood or a hurricane, that the policy will pay the damages, or are there exclusions that the insurance companies are going to say, well, sorry, we don't cover that?
Uh,
Uh, yes and no. The I think if your insurance is with an admitted company, then you can be pretty assured that you are going to be able to get your claim. How much of a claim? That, of course, depends upon the provisions of your policy. I think I had been telling Pam, one of my clients could not get traditional homeowners insurance for his property in Malibu from any of the admitted carriers, so he had to go to an unadmitted carrier. The amount he paid
Well, what's an
pays
admitted
homeowner.
carrier? I'm sorry, what is an admitted carrier?
Um, I can't speak to the legal aspect of it, but it is a carrier that your state insurance commission has somehow
Authorized.
approved.
Got
And
it.
if
Thank you.
and
Okay.
and if the insurance company fails, then the other insurance companies writing insurance, as well as the state, will back the
There's a guarantee
any
fund.
capital shortage.
Got it.
But in
Okay.
a not admitted company, you're relying purely on the capital of that particular insurance company.
So, but
So,
just for simplicity, let's assume that our audience has admitted insurance companies, but they want to know that if there's a fire or hurricane or flood, their insurance company will pay them for the damages. Can they feel confident, or should they be, is there something they should be checking to be sure about that?
well, here's where I believe that a good independent insurance broker, property and casualty insurance broker is important. And we have them on our team. They're not part of our firm, but we have resources with people who we rely upon to be able to obtain the best insurance. They have multiple markets that they could go to. And they will do the best for you. The tragedy right now in certain parts of the country, here in California, and I assume in Florida, uh, is that number one, insurance is becoming so much more expensive that it is really a major portion of people's budgets.
Yeah.
And many carriers are no longer writing insurance in certain areas. There's one which was the largest insurer in California, stopped writing new policies in California. And that was before the recent firestorms.
Yeah.
And so, what is going to happen on a go forward basis is anybody's guess. I understand here that if companies wrote insurance, they are mandated by the state now to continue to write for another year after expiration at existing premiums, but that's only 1 year. What happens after that, I don't know. And in all candor, so many people get angry at insurance companies because of the premiums rising. But the truth is that if they're shareholder owned, they're entitled to make a profit too. And so, and their rates have to be approved by the state. So it's something we need the insurance, but the insurance companies have to charge a rate so that they could hopefully get a reasonable
Well,
return
I'm
on
in
their
no
premiums.
danger of having a great deal of sympathy for the insurance industry. I'm more the advocate for the individual who may or may not be able to get back on their feet and may be in the position where right now their decision to rebuild, Mitch, is so dependent on all these factors about the future. Am I going to be able to get properly insured? Can I stand going through this again? I've got to, like, if I'm in that position, and I have friends also who were Pacific Palisades who have to make that decision. It's really painful. I want to be here. My kids are in school here. Do I want to really go through the protracted process of rebuilding and so forth, or do I want to consider moving? These are all major financial decisions. But what I got out of this with you that I just never knew was, and to Richard's point about planning ahead, is that to already know who you're going to go to, have your independent vetted. It's going to take time to weed through and find the right independent public adjuster who can be on your side, who's had experience with this insurance company before. That's if you live in an area that's prone to disasters, if you're thinking about rebuilding in the same area. I think that now you have to have that in your arsenal, because it's not a matter of if something's going to happen. It's a matter of when and how. Am I going to have partial flooding or partial damage from mud or whatever it might be, or am I going to have full damage? And knowing that the insurance industry is shifting tectonically right now, I just think that this is how you protect yourself.
Yes, there's one other point that we haven't discussed, which came to light and is something that people should be aware of, particularly those who have home equity lines of credit. I won't mention the bank, but a major bank here in the Los Angeles area, within days of the Palisades fire, sent notifications to all of their borrowers who had home equity lines of credit that the lines of credit were frozen at 50%. I'm sorry, $50,000. And it caused an outrage because people, they thought that they had another potential resource that they could tap in order to be able to provide them with funds should they need them. I
It's
don't
called
know
a
if
line of
other
credit.
I don't know if other banks did it, but this one bank did. And I think it's just something to watch because a lot of people who have homes and have done well, many people just have like lines of credit that they think is
Got a home
a
that's paid
resource
for.
they could cap.
Yeah.
Yeah. So it's just another point that has come to light that I hadn't been aware of.
Yeah.
And it's certainly something I have in my arsenal now to be aware of when negotiating HELOCs on behalf of clients.
Yeah, wow. Rich, Terry, anything else?
Wow. Let me just make a couple of points here. I'm trying to summarize there's the before and the after.
Yep.
And if you haven't been through it, I mean, this is one of those things you don't want to ever do a second time. It's like remodeling.
Yeah.
Redoing your kitchen. Once you've done it once, you don't ever want to do it again. And the lessons that cost the most teach the most. So thank you, Mitch, for some incredible lessons about the after things in terms of getting an adjuster, in terms of understanding about property taxes, in terms of understanding the financing. You can't have a home equity line of credit if your house is burned down. You get that. I think for most of our audience, though, the real value of this has been in your explaining how important it is to be prepared before. Physically, knowing what you're going to take is a lot easier, I would think, if all your financial stuff is up in the cloud. So if your estate plan, your cemetery deed, your tax returns, your everything. I'm not a shill for Quicken's new Life Hub, but go to quicken.com and search for Life Hub. The product just came out in November. Look at our podcast from a couple of weeks ago. It explains it. Also at terrysavage.com, I've had for 30 years on the top right-hand corner something you can print out and fill out or print out online and print it out, filled out, called my personal financial inventory. Every credit card account number and the toll-free number you call when there's a disaster, because if your card is stolen, the number's on the back of the card. So it's a great way, where your will is in your safe deposit box and so forth, to be prepared. If you knew that all of that stuff was secure and safe up in the cloud or somewhere else, then I think what you'd grab is, I was thinking as you were talking, heirloom jewelry, photos, pictures. And I think knowing in advance, if you were running out of the house, what you would grab would be really important. We watch disasters on TV. We wonder, how could a whole city burn down, or Florida?
How could Asheville happen?
Asheville,
Right. Altadena.
Yeah, it's so.
Yeah.
Thank you very much for letting us know both the before and the after, and the critical ingredients, which hopefully none of us will have to know, but being prepared is really essential.
Yeah, I do think this is something that years ago people would have said, well, that's not something I need to worry about because of where I live. I'm okay. The truth is, as you said, with Asheville and Altadena, places that we didn't think were going to be problem places turned out to be. I think every place could be a problem. And the more you're ready, just in case, the better off you'll be.
Yeah. I mean, we've had tornadoes in places we never even thought tornadoes could ever come up. Great advice, Mitch. Great eye-opening, get prepared, but also, speaking to the people who have just been through it, things they need to be thinking about right now, especially with the adjuster. And, obviously we hope that you never have to deal with any of this, and we hope that if you're watching or listening from someplace that's never been threatened by fires, floods, hurricanes, or mudslides, I mean, again, anything can happen anywhere. So hopefully today's show inspires you to get your Go kit in place, because I know it does for me. It's really rich. Everything I've learned from you has changed for me, what I'm doing in my own life to be prepared. So thank you, Mitch. And we will have everything in the show notes organized by before and after. And we'll see you next time on Friends Talk Money.
My pleasure.
Thanks, Mitch.
Bye-bye.
Friends Talk Money is funded in part by a grant from the Investor Protection Trust. The IPT is a nonprofit organization devoted to investor education. Since 1993, the IPT has worked with the states to provide the independent, objective investor education needed by all Americans to make informed investment decisions. Visit investorprotection.org. We also receive support from the North American Securities Administrators Association, known as NASA. It's the oldest international investor protection organization. NASA's members include state and provincial securities regulators from the U.S., Canada, and Mexico who serve on the front lines of investor protection. Recognizing that education and awareness are powerful tools in the fight against investment fraud, NASA is pleased to sponsor Friends Talk Money. Here are 3 important tips to help you protect your money from fraud. With investing, there are always risks, so be cautious of anybody telling you that a certain investment is guaranteed. You should also proceed with caution if somebody is promising very large investment returns. This is a common red flag for investment fraud. Last and most importantly, be sure you're working with a licensed or registered financial professional. You can check your advisor and make sure they're licensed by visiting brokercheck.finra.org. NASA is your partner in keeping you safe and helping you avoid investment frauds. Visit nasa.org and click on the Investor Education tab to learn more.